So we're a little dated on this topic, but one of the things Zach and I had been texting about was a story that the information had reported that I think has a broader, I don't know, extrapolation that at least he and I were texting about a little bit. So I thought it would make for an interesting topic. So DataRobot is a Boston-based AI, artificial intelligence company. And over the course of the last couple of months, they've been embroiled in some different scandals. Their CEO and co-founder, Jeremy Atchen, stepped down after disagreements with the board, and the COO at the time, I believe, Dan Wright, stepped into the CEO role. What had been reported a few months ago was that the CEO and a handful of other executives had sold about $32 million of stock while the company was at their peak valuation, which was about $6 billion. And so they collectively, the executives sold and didn't offer it to the rest of the companies, the rank and file employees that had been there for a long time. I believe those executives that sold had been there 18 months or something like that. And the CEO, I believe, sold about $20 million, and then a handful of other executives sold the balance, the 12 million. The reason that they had sold was the board had granted loans to the company, or sorry, to the employees from the company, for these folks to early exercise their options. And this was done to repay those loans that were given by the company. And so they sold a little bit of secondary compared to their overall position, that allowed them to repay these loans. This was done a few months ago, that it was reported on by the information. It set off a total shitstorm within the company. Zach, I think you had maybe different opinions than me about this whole situation, or at least some interesting insights. So I'd love to get your take here.
Yeah, I guess, I mean, when you had sent it to me and I read it, and then I had to reread it to make sure I understood what I think the controversy was, which was, if I define this right, a bunch of senior executives at a private startup essentially selling some of their equity, whatever equity they owned, in like a secondary sale while the company was still private, to some outside investor, might have been insiders or outside, I don't remember exactly, and taking some money off the table
Yeah.
where,
And just a point of clarification, it was an outside investor, and it was, I don't believe it even went to their bank accounts based on my reading of it. It went to repay a loan that was granted to them by the company. And so they took out a loan to early exercise their options, and they sold a small portion of secondary to then pay back that loan.
yeah, and you get your long-term capital gains clock starts
Yes,
to
the
tick
clock run.
basically.
Yeah.
Yeah. And then in a sense, like, the controversy within the company was that only a small set of senior executives were able to do this, and it wasn't offered to the broader population or the broader
Correct.
employee base. Right.
Yeah.
And my reaction was, this is happening everywhere. Why are we surprised in this? That was the thing I didn't understand. And it's not about whether I agree with this or not. And I have my thoughts on it broadly, but it didn't seem surprising to me, because this is something that happens in some way, shape, or form, typically with founders, but not always. It can sometimes be the senior execs, where they're offered the ability to sell some of their equity to take money off the table in a private financing round. It's how you see founders of still private but very large companies all of a sudden have a bunch of money to do angel investing, right? Like, where do you think that money came from? It's not like it's coming from their salary. It's typically because they were given some secondary. And part of the reason, just to justify at least one side of it for a second, not, and then I can maybe argue the other, but is that, as an investor, you don't want the founder of the company worried about having like a little nest egg because you just wrote them a really big check and you want them swinging for the fences. So you want their risk appetite to be turned on. You actually want them swinging for the multi-billion-dollar outcome. And what you do to give them that risk appetite is you let them cash out some, like enough. And everybody's enough is like totally arbitrary and made up, but maybe you let them sell 5 to 10 million, something like in that range. I've seen higher when it was like a really crazy bull market where people sold like 20 to 40 million dollars. But that's the general logic behind it. And I guess I was surprised that this was new to people because it's been happening all the time. And again, I'm not trying to justify it. Like I completely understand the employees' take of like, if the founders are selling their common shares, like why wouldn't everyone else be allowed to do it? It's unfair. And like, yeah, yes, it's unfair. But it happens everywhere. So why did it become such a big deal, this one company?
I guess the distinctions I would draw here, and I think what led to the outrage is, one, the dollar amount was really high, right? 32 million, 20 for the CEO. Now their equity was obviously percentage was high. As such, they needed a large amount to early exercise as a loan, right? Maybe the more interesting and slightly more unusual part of this is that they were granted such a big loan by the company, right? To early exercise. So that's an interesting thing, but I can understand when you're a CEO coming in, you're sophisticated and you want the ability to start the capital gains clock. And so maybe, that's on the board for allowing all of this to happen, I guess. Again, I've had companies that have done loans for executives as they've come in, right? And so I don't judge it necessarily. Every situation's unique. But I would say that was one, was the loan is more of the unusual part of it. The secondary, I would say, happens more. The second thing is these folks weren't here particularly long, right? And so more often when you hear the big secondary sales, it's often a founder. And I think that really, at least the chief AI strategist or whoever stepped down, he was like, you're basically taking money out of the pockets of the people that actually built this business, who are the engineers that have been there for 5-6 years and were not afforded the luxury to take chips off the table. And so I think
it was like a hired gun team as opposed to the
hired gun team. They all sort of came over from App Dynamics together, I think, to help run the business. And so that was part of it. And then I also think outside of the loans and the dollar amounts and the tenure, I also think what happened was it didn't seem like their performance, at least now in retrospect, I don't know what was going on at the business at the time, but their performance, they had misplanned pretty significantly. And so I think that at least the criticisms I saw were that the executives were provided this financial reward incentive when they hadn't actually performed or met the expectations that they set out. And so I think, and then also the market, right? In between when it happened and they were valued at 6.3, went down pretty significantly. And so that if these employees hadn't sold been given the option to sell at 6.3, but there was a round going down at 10 billion right now, there would not be this vitriolic post and people resigning, right? If they were now given the option to sell at 10. And so I think also the market tanking has led to a little bit of the sour grapes behind it.